The one that we are just ignoring because times are so good on paper is who the hell is going to buy these companies if they don't IPO? What the hell are Replit, Legora, Harvey, Level? What? How much is Lovable worth in the last round? $8 billion?
6.6.
Okay, let's be honest. Who the hell is going to buy them if they don't IPO? You really think Google's going to buy them for $32 billion? It could. Look, don't get me wrong. It could happen, and acquisitions are not up, right? Dollars are up. So my point that is under discussed is we are doing these post $1 billion deals like candy, and at least in the bubble of 21, there were PE exits. There were many exits out there. We have outstripped any current ability for these companies to have any exit. So you are going all in on the IPO and not without any worry, rhyme or reason. And I think so many folks sub-Anthropic are going to get their arses burned because they'll end up in the dead zone. They'll have great companies without great IPOs and zero M&A opportunities. It's terrible to raise north of $1 billion. It's terrible because you just they're not, Salesforce and Amazon. I mean, Grok is great, but a lot of the stuff is not Grok.
I agree with everything you're saying, and what's hard about you saying it is that the strategy that has worked has been precisely the strategy of doing those rounds above $1 billion and getting the round beyond it. But you're right. It's all predicated on being able to exit these companies in an IPO. And I will say, just to remind you, you can imagine a world of IPOs where some of these companies exit, but if the last rounds don't have a block, it's not necessarily going to be above the last rounds. There are some awesome AI applications companies where you kind of go, I totally see how that's worth $5 billion in 3 years based on fundamentals. And right now it's valued at 10. And 3 years from now, I could contemplate it going public at $5 billion. And you kind of go, that last round of 10 is going to have to convert and take 50 cents on the dollars unless it has a meaningful block, in which case it will get more of the company.
Yeah, for sure. I just worry there's some ratio, Rory, you can name it, but there's some ratio of potential acquirers divided by unicorns. And I think we're at the lowest ratio of our careers.
Yeah, no, absolutely.
The lowest ratio of potential acquirers divided by unicorn plus up to decacorn. They're just not there. We've lost all of PE, and NVIDIA isn't buying 100 companies. Microsoft is not buying 100 companies.
So what is the subsequent thought then, Jason? Sell aggressively into secondary markets, which are more liquid than ever?
Well, probably for early stage investors, sure. Sell while that's the Hoppin lesson.
I think you're saying, even for your fucking great excuse my language, great companies, where you know in the end they're not going to be hopping, they're not going to be vanish in a puff of blue smoke. You're still right, which is those last rounds might be at prices you'll never see again. And what should you do as a seed investor?